It's getting hit hard. Wow. The reaction you get when you do it the other way and dump it is crazy. At the same time, your short position on SLV is one of the biggest ever. More than 80 million shares are short on the market, which changes this. This could be one of the biggest delivery months ever, or even one of the 3 biggest ever. They are in a fight right now. At the same time, it's being hit hard. The price has changed because the shares are being pushed down, but at the same time that they're driving down the price of paper, huge amounts of gold and silver are being delivered this month. Gold falls below $4,000 as buyers sell safe haven assets ahead of the trade deal between the US and China. As investors moved away from gold on Monday, the price went below $4,000. This was because they were betting on a trade deal between the US and China. It fell below $3,980 an ounce of spot gold, and at one point it went below $4,000. Futures for the December delivery fell over 3%. Ahead of this week's meeting between President Trump and Chinese leader Xi Jinping, officials from both countries said that the trade dispute was likely to end soon. After dropping the most in a single day in more than 10 years last Tuesday, the price of gold futures has been staying above $4,000. The drop in gold prices last week ended the biggest year-to-date rise in more than 40 years and ended a 9-week winning streak. There have been 16 other reversals like this since 1975. Some of them did mark short or long-term high points in the price of gold, but a lot of them also happened during longer-term uptrends. As of Monday, Bespoke Investment Group said in a note that gold may only need some polish even though it did lose some of its shine last week. Now we'll show you the best parts of the most recent interview, but first hit the subscribe button, click around the video, and go to goldsilverstacks.com to get the Stacker's Handbook, which is the best way to trade the gold-silver ratio and stack efficiently without having to rely on market analysts. Link in the reply that was pinned. Let's watch the show again. People no longer accept the US dollar system. We also paid a lot of attention to Enbridge, but I think the SIP system, which is China's version of SWIFT and is a cross-border payment system, is what the Enbridge system will be built on. Over 185 countries are already using SIPs to settle. This includes Asian countries, which make up 35% of the world's GDP and are China's biggest trade partner. They also have twice as many people as the US. The really cool thing is that countries don't have to keep piles of Chinese yuan on hand if they accept it as payment for something, unlike oil or soybeans. These yuan amounts can be changed into gold through the Shanghai Gold Exchange. What this means is that exporters who don't want to keep yuan can go to the Shanghai Exchange and exchange their income for gold bars. From yuan to gold, it's pretty much a backdoor. As we talked about, the next vault is being built in Saudi Arabia. Traders will talk about this deal between the petroleum and gold for this reason. You can now exchange the yuan for gold instead of dollars for anything. It's not backed by gold, but you can turn it into gold right away. Finding an alternative to the dollar-based system is what it's all about. This system has only been backed by trust and faith since 1971, and you can see that's falling apart in many ways. At the end of the day, I believe this is the truth that isn't getting better, and neither is our economic responsibility. Our debt to GDP ratio is 123%. As far back as I can remember, any country with 100% poverty would be called a banana republic. We've added 100 billion a week in just 71 days. How long does that last? This is something I think people should think about. It's possible that this is why big money is starting to move into gold. The central banks have been in charge of it, and now Bank of America, Jefferies, Morgan Stanley, and JP Morgan are all saying that they're rethinking their stance on gold all the way up to 25%. And you hear Michael Gunlock, the big bond trader and bond king for BlackRock, say that a 25% allocation to gold is not too much. That's just not something that would be said. And I think the supplies off of COMEX say it all. The smartest traders in the West feel the same way. They'll cover their shorts and wait for delivery if they're going to lower the price of paper. That's what we see. Seeing prices drop like they did was an emotional thing, but it's being done in a very illogical way that's not being talked about. Plus, they're throwing it into the matter just to make people feel that way and make them angry. The price of silver falls below $47 today because people are hopeful about a trade deal between the US and China. The price of silver stayed low for the third day in a row, trading around $46.80 an ounce during the Asian trade session on Tuesday. The safe haven metal silver's price fell 3.78% in the last trading session. This was because people were willing to take risks because they were optimistic about the trade talks between the US and China. China and the US said over the weekend in Malaysia that they had reached a framework agreement on tariffs and other big issues. This means that Presidents Trump and Xi can finalize the deal when they meet later this week in South Korea. Scott Bessent, the US Treasury Secretary, said that President Trump's plan to put 100% tariffs on Chinese goods is no longer an option. Bessent also said that China had agreed to buy a lot of soybeans and put off its controls on exporting rare earths for a year while they looked into it again. But the gray metal might not go down too much because it's more likely that the US Federal Reserve will cut interest rates on Wednesday. At its October meeting, the Fed is likely to lower interest rates by another 25 basis points, taking the key rate down to between 3.75% and 4%. The CME Fed Watch tool shows that there is now a 97% chance that the Federal Reserve will cut interest rates in October and a 95% chance that they will do so again in December. The U.S. government shutdown has also caused a debate among Federal Reserve officials about whether to cut interest rates soon to help the weakening job market or keep them the same because inflation is still above the Fed's target of 2%. This may make the market more cautious. Now hit the subscribe button and turn on alerts so you don't miss our daily summaries. Also go to goldsilverstacks.com to get the numismatics manual. This is the best book for people who want to trade gold and silver coins instead of selling their bullions for cash. Have fun with the show. You can see the response by doing it the other way around, which is to dump it. It's oh my gosh. To back up your point about being careless with money, the US government added $1 trillion to the debt in just 71 days last month, bringing it from $37 trillion to $38 trillion. The cost of interest on the debt is rising so fast that it's now the biggest item in the budget. All of this doesn't even touch on the huge and disgusting unfunded future bills. I don't see how you can pay them off without making the currency worth less. For me, that's the only way it should be done in the end. As a result of this deal, 38 million ounces of silver will be shipped out of or into the COMEX in New York this month. Some of it stayed in the New York Exchange. In fact, that means it's on track to be one of the busiest months for deliveries ever. And this is a deal where you have one of the biggest short bets ever on SLV. More than 80 million shares are naked short to change this. This could be one of the biggest delivery months ever, or even one of the 3 biggest ever. They are in a fight right now. At the same time, it's being hit hard. And SLV is short 84 million ounces, which is about 80 to 84 million shares. That's 83.86 million shares, which is 15% of all existing shares. I'm not sure if that's ounces or shares. I think it's shares. Thus, the shares are being pushed down, which has an effect on the price. However, this month there have been huge supplies of both gold and silver, which drives down the paper price. It's a very interesting and hard to understand market. But, when the paper price goes down and a lot of people buy in person, it should really open your eyes.